Alibaba's shares have been battered over the last couple of weeks, but the question is, are there opportunities with the options chain, especially in the cash secured put space, which is where I've actually invested? And in this video, I'm also going to go over the brand new Alibaba model, and I'm going to take you through the model. So guys, smash that like button, subscribe if you're new, and of course, drop a meow in that chat. You're watching More Money. Let's get it. What's up, guys, and welcome back to the channel, where the goal here is to help at least 1,000 people achieve financial independence much sooner. Now, I've kind of already given the bag away here because I've shown you guys the new Alibaba model in the granular detail in the previous videos, but if you haven't seen it, I'm just going to quickly go through it here before I go into the sort of like the options chain and sort of how I'm thinking about playing this whole Alibaba decline recently, because I have been mentioning that I do want to triple down on this. So I'll let you guys know how I'm thinking about it and the position that I'm thinking that I'm going to take. So you can see here that the way that this model is valued out right now is that I'm being very pessimistic for fiscal year 2023. I do expect revenue to go backwards by a 4.8%, but the question is, what is Alibaba really worth? And I do believe that, I mean, this is an obvious statement, but it all depends on how you forecast out the segments. And this is my base case. And in my base case, I'm effectively saying that the China commerce retail segment is only going to grow up by 10% a year. International is only growing up by 10% a year. Cloud is only growing at 15% a year, and so on. So overall, revenue is only growing at 10% a year for the company as a whole. Now, that could be deemed very pessimistic, but if you look at the base case valuation, just with a terminal multiple of 20 times earnings, which again is very low, you can see that the share price valuation is approximately $300 per share. So just at that pessimistic, or what I would deem a pessimistic base case scenario, you're getting to around $300 per share. Now, what happens if you increase these growth rates for the segments a little bit higher? So for China commerce retail, notice I have it circled in a red box here. It increased from 10% to 15%, and so we forecast 15% out. Same with international. It's now being forecasted out at 15%. And then with cloud, I increased that 15% to 20%. So I believe that the company can be worth a lot more if you adjust the revenue growth expectations for the segments above my base case, because I do believe that my base case is quite pessimistic. And so looking at the free cash flow per share valuation model, notice that I took up the terminal multiple from 20 to 25 times earnings. You can easily arrive at a $450 per share valuation just with these couple of tweaks alone. So that should show you how much value there really is. The reason why I'm using more of a pessimistic model is because I always do that. In all of the other models that the Patreons get access to, you see that in many cases I'm very pessimistic, or I'll value out the company the way that management is forecasting it. And then in the valuation, I'll put a note saying, hey, I want to buy this at under 50% of its intrinsic value or less. I get very greedy in many situations, but the reason why I do that is because I abide by rule number one, which is don't lose any money. And so I'm happy to get a lower annualized return than lose any money over the long term. And up until now, that strategy has kind of been okay. Charlie Munger always says, try not to do something stupid. And so all I try to do is just try not to make obvious mistakes or even like semi-obvious mistakes, and I generally only invest at valuations that make more than enough sense. And that leads us to the next section of this video, because one of the things that I really love to do is if I already have a shareholding position in the company and I want to sort of double down, sometimes the way that I do it is just by selling cash secured puts. And so what I wanted to do is, you guys have been asking me to sort of walk through sort of how I analyze cash secured puts. It's actually pretty basic stuff, and so I'll walk you through how I look at it. So you can see here, this is, and I've highlighted in the top left, this is the January 2023 cash secured puts for BABA. And the reason why you know that it's a January 20th is because you can see the date there, 23/01/20. That means January 2023. And then the P means put. And so, of course, you can buy these puts, but I sell the puts for the premium, right? And so you can see that the $60 January 2023 cash secured puts are yielding approximately 10% a year annualized. The $80 cash secured put is yielding an approximate 19% annualized. It's not a year, it's just an annualized return. So that one's pretty interesting. And then the $100 are yielding 36%, and the 120s are yielding 57%. Now, with the ones that are shaded in blue, those are referred to as out of the money cash secured puts. instead of selling out of the money cash secured puts, you can actually just buy the shares and sell a covered call, and it will get you effectively the same yield. But the one problem that I have with the near term cash secured puts, like these ones that I just showed you, is I did like that $80 cash secured put because it gave you a 19% annualized yield. However, it doesn't give you a lot of downside protection. So you sell it at an exercise price of $80, but your premium is only $7. So your net purchase price is $73 per share. That's not bad, especially in an environment where the shares are trading slightly above $92 per share. But because this is a triple down, I want to get even safer. So I want to get like the $80 strike price cash secured put for $20 in premium. And so if I want more premium, I obviously would have to give up on the annualized yield. That's for sure, because the further out you go, you're going to get more downside protection, but you're going to give up the annualized yield. But because I'm focused more on not losing money, that makes a lot of sense for me. May not necessarily make sense to you. Now, based on that sort of thinking patterns, let's look at the 2024 cash secured puts. So notice the $60 cash secured puts for 2024 are giving you around a 7.5% annualized. That's not a bad yield, especially at $60 per share strike. The $80 are giving you an 11.5% annualized yield. The hundreds are giving you 17%, and the 120s are giving you 21.5%. Now, the hundreds are actually what I already sold. I sold this cash secured put at a premium of $30 per share, and I will actually link you to the video where I walk through that whole position in detail. What I'm looking for in this current environment is I want a net purchase price that is much lower. Now, the net purchase price of the $100 cash secured puts is $70 per share, so that's cool. What I'm looking for now is a net purchase price $55 to $60 per share, closer to that $55 per share if I can get it, but I just don't think I'll get it. But because I already own the shares, I'm looking to wheel Alibaba at a very low net purchase price. So I would love to triple down using the $80 cash secured puts at the $20 per share premium at a minimum. Ideally, I want the $25 per share premium, but I just don't think I'll get that. So I'll take the $20 per share premium. That would give me a net purchase price of $60, which is $10 per share less than the net purchase price that I got from the $100 strike price cash secured puts that I sold earlier this year. And so that's effectively how I'm thinking about it. There's no rocket science here. There's no best position. It's just what works for you, what you're most comfortable with. You might just be more comfortable with buying the stocks straight out. And I always say you make the most money by just buying the stocks and owning them and not playing at all in this sort of options marketplace. Now, if you want access to that brand new Alibaba model, you can get access to that at the lower tier of the Patreons. And if you want to join us for a live epic presentation each month, which I reserve my very best work for, you can join us at the upper tier of the Patreons. Now, I did mention earlier in this video that when I doubled down on Alibaba, I made a video on it and I completely broke down that position. And so you can get access to that video right here.